Good morning. Welcome to the next update of the measures that the government's putting through. Now, I've literally just finished watching Scott Morrison and Josh Frydenberg with their press conference announcing the second part of the stimulus package that's coming out, which they're calling more of a safety net package rather than stimulus package. So hot off the press, I've got the economic response paper that I'm going through. So it's very fresh, and I thought I'd shoot this little video quickly now with some updates just to keep you up to date with what I think are the important things for you and your business today. Now it is Sunday, and so hopefully I know I told you to write some numbers down and also to work out some cash flow issues and also spend some time with your family and stuff. And I know you will. Hopefully this won't go for too long, but if you can start to listen to this, there's a massive media hype out there talking about things. And the issue that we have here in with our client base is that, remembering the media, a lot of the media is talking about not only stuff in Brisbane, if most of our clients are around here or whatever, they're talking about a national thing. You remember, some of this stuff today is all about federal government, but the state governments have their own jurisdictions and their own powers to make decisions. So I'm trying to cut out a lot of that noise and see what's relevant for you. At the end of the day, what's important to you is, am I opening up my business tomorrow? Are we going to be there in 6 months? And what are we going to do to bridge that gap and get to the other side? That Scott Morrison so eloquently suggesting all the time when he speaks. So that's what I want to do. Just let's look at how it is with us. Yes, the coronavirus is spreading around the world, and it's important to know what's happening overseas. I've been tracking some economic stats from overseas to see how it happens. One of the good things, I guess, is that we've got some precedent, if anything, from America and from Europe, which really is where the money is in the world, and obviously China, to see how things are happening there. They're a little bit ahead of us in terms of where things are happening. I opened my heart to all my family in Europe, and especially in Italy, that are going through such a hard time. Videos out there are totally horrific. But that said, that's over there. Let's concentrate on us and our families and our businesses and our people that we have. That's the most important thing that we need to do. Now, so this video is about where it is today. There's going to be probably more announcements. There's not a lot of detail in what happens in terms of how things are going to happen, how banks are going to jump on board, what are the policies going to be, what are the application forms going to be, those type of things. However, this is what's been, discussed by the government and mandated by the public. There's going to be a cabinet sitting tonight, I believe, and also a debate with the opposition. I think the cabinet might be meeting with the shadow cabinet tonight to discuss these measures. And there's going to be debate in Parliament tomorrow. So remembering these things aren't enforced until they're actually received or all sent, right? So you've got to remember that. Now, that said, hopefully there's a spirit of brotherhood in the Parliament, and we understand we need to get this stuff done and get it out there. Now, I can't stress enough, number one, okay, the people in Canberra, in Brisbane and Sydney and Melbourne and Perth and Northern Territory and Canberra, they're working on these macro issues. They're working on every single person being treated equally in this world, in Australia, and making sure that we come out of this as strong as we can. So they're meeting with people, they're meeting with doctors, they're meeting with the medical associations and the business associations and industry, and they're getting lobbied from left, right, and centre, speaking to the ATO. All these type of things are happening right behind the scenes. We are not privy to that, and we shouldn't have to be privy to that. So all I'm going to tell you from my experience, from speaking to people in Italy, that I've got clients that are in Italy in isolation. I've got cousins and family there, right? Our job right now, exactly what Scott Morrison said, is to look after ourselves and social distancing. Yesterday, I drove past Cannon Hill, and I could see the Bunnings car park was full to the brim. Was it that necessary that people had to go out and buy the washer and the whatever? Okay, it's helping Bunnings. And it might be helping you with your business, but guys, come on! It was a Saturday. It wasn't all tradies. It was home mum and dads. Okay, social distancing is what we can do. That's all we got to do. If we just stay away and we reduce that curve that we're all talking about. At the moment, we're going to surge towards, and again, it's not, I don't want this to be a medical talk, but we're going to be surging towards the fact that we have more sick people than beds, more sick people in critical situations than ventilators, right? As long as we have ventilators and we have people who can be working in hospitals, we have hospital beds, then the greater the chance is obviously that we're going to get through this, even if we do contract this virus. Okay, so stay away. That's what you got to do. That's our job. Our job is to do that and stay away. All the other economic stuff will come. Now, remembering, this is a virus. This is an economic crisis. This is a virus. That's the first thing we need to look at. We need to kill this virus and get rid of this virus and make sure it doesn't spread. Because as soon as it starts going on a downward spiral, then that's when we can start re-energizing the economy. Okay, so that's our job. The longer we can make that, the shorter we can make, that 6 months to 4 months, or if it's going to be 12 months to 8 months, that's when we're going to walk out, the better it is. Because these government cannot keep on extending 6 months terms and giving us more money. Someone's got to have to pay the piper. Okay, and that's my biggest concern. And a lot of my clients are going, well, how much money does the government have that can actually afford to give out before we're broke? 100%. Okay, think about that. So our job is to get away from people, do what we can, start implementing all the things that I told you to do in my previous recordings. Okay, stay away from people, social distancing, working from home, and doing your best to avoid interactions in public places. That's your job, right? Let everyone else do their other stuff. I will still feed you back information as much as I can. All right, that's my little rant and rave, and that's as far as I'm going to go with it. Let's go on to the economic response. Okay, so this one's going to bring up the total amount of stimulus or safety net, whatever you want to call it, to 189 billion, which, and this will frighten the daylights out of my economic clients and people in the banks. Nearly 10% of GDP. When we start talking about budgets, when we do budget nights in May, we're talking maybe a couple of percent of GDP and stuff when they do things. So this is massive. This is huge. Okay, so. Again, I just highlighted some pertinent things. Again, this is fresh off the web, and again, I haven't bothered to listen to anyone's commentary on this. I've just done this straight away after I heard the Prime Minister speak. So there's going to be some different ideas that's going to come through, and I'll update you on them. Okay. So yes, there's going to be economic issues, right? If you have a look at things like oil prices fallen 60%. Our commodities are still okay, thinking that, basically that China's going to recover quicker and start asking for more resources. So again, because we're one of the best economies in the world, right? Think about it. Let's be positive about it if we can. If we can get rid of this and do what we've got to do and turn around, and we're one of the earliest countries that turns around and actually go back out there to work or whatever, we're going to have competitive advantage over our neighbours. Okay, so let's think about that. Okay, because we'll bounce back, and we'll bounce back bloody hard. Okay, okay. So here's some things. Government responding. Again, that solidifies what I just said. It's one of the most advanced economies, and so therefore, it's trying to give us a bit of comfort. Can we actually afford this stuff? Right. So at the moment, obviously, we can. Right. So, but it means that we've got to help the situation and not make it even harder for the government to prop us up. Okay, so in terms of the support, okay, so I guess in a nutshell, what's happened and what I think what's happened in this whole thing is that it's increased Centrelink money. So it's obviously had a lot of people going, well, mate, I might not have employees and I've lost all my income. So what's the point of giving me some credits in my BAS going to do for me? So it's reduced some of the deeming rates. It's also reduced. I believe that it says here. I just took some notes as Scott was talking. They're gonna reduce the income and assets test, or even waive it. So they're doubling the job seeker. So therefore, if usually when you go for these Centrelink entitlements, there's assets tests, there's income tests. Well, they're going to waive them, so you can get straight in and get some money. I think also on a side note, make sure that you've got MyGov. Everyone should have a MyGov registration, because a lot of the applications and a lot of the information is coming through there. So I think if you've got MyGov and it's working nicely, I think you can actually apply for a lot of these things directly through there. So that's important. So maybe that's another tip. Make sure your MyGov's working properly, and both, say, people at home, both of the adults have got them. Okay, so they're over the next 6 months, they're going to be putting a supplement of $550 a fortnight on your support for individuals. So that's going to help the clients there who are basically got nothing. So they'll be able to get some Centrelink money to help bridge the gap. Now, remembering these are the sort of things that I like to see in terms of not loans. Like, I think loans are going to have their place, but I think that's not free money, because it's not a good thing to say, because it's come from somewhere, but it's money that you're getting injected in that you don't have to actually pay out again, right? So they're important. So the people who are getting the 750s, they're going to get another 750. I think it's opened up to more people. So I'll be sending this brief with my video once it's all done in a minute. Okay, so if you have a look at the first payment we made from 31st of March, and then the second payment 31st of July. So it's going to help pensioners. Now, a lot of people are going, well, what's the point of helping pensioners when they're sitting at home and they can't get out and they can't spend the money? Well, it's still going to be injected in. They're still got to survive, and they've still got to make sure and hopefully pump that money back into the meals and wheels of the society, which or something to help us the economy take over. Okay, so this is the first one. It's really like, as a finance professional touching super, you start to know that things are getting serious. Superannuation, is there by definition in the SIS Act for your retirement. Okay, so the fact that any single person who's affected by the coronavirus. Now, I'm going to love to see how affected by the coronavirus actually is going to be defined one day, because if you're not affected, I don't think you'd be living on this planet. So there might be some points that you need to prove. Now, everything I'm hearing, I haven't heard anything to contradict this, but ATO, Queensland government for payroll tax, the leniency is going to be stepped up. Okay, so I really do believe that, hey, can't pay my bill, or hey, I can't do my BAS, or hey, I need some of this, I need some of that, or hey, why can't I get this? What do I got to do to prove that I'm being affected? I think that's going to be tapered down. So I think what Scott Morris is basically saying is that, rather than saying it's a free for all, it's almost in inverted commas a free for all, but it's there've got to be some rules around it. But I think that it's not going to be very difficult to get these things. So, again, talk to your financial planner, talk to us about this superannuation. So you can take 10 grand. So you can take 10 grand this financial year, and then so in July you'll be able to take another 10 grand out of your super. Now, again, a lot of people are going to go, well, what's that going to do with our balances? Well, let's survive this epidemic, and let's worry about how we do that. Yeah. Your superannuation is probably going to be skittled anyway, because a lot of your superannuation is invested in shares, and the share markets are down by 20% or something at the moment. So, so answer that question. It's get some money into your family when you need it, right? And the rainy day is happening now, so let's get that organised. So there's that. So again, talk to us about if you need to do that. All right. This next bit here, and I'm just doing it in order of not of importance, but order as the provisions coming out, or the release of press releases coming out. So again, not a massive issue for most people in businesses, but this is more an issue for our retirees, which means that when they're paying their SMSFs pensions, and also pensions from their normal public funds, that they can reduce how much money they need to take out by law. So that's going to be good, and we'll talk more about that come 30 June. So reducing deeming rates. So this is another for retirees, that people have their own savings, because the interest rates have gone down so much. They're allowing us to use a deeming rate, which again just adjusts your pensions and benefits. So again, we'll talk about that more for people who are on that pension. This is the most important bit. Hey, hence the highlighting starts to ramp up a bit. Now, from what I can see from this next boost, everyone's talking about cash bonuses, cash payments, cash this, cash that. I say that I agree in inverted commas, because what I think has happened in this support, and it's interesting how this press release is basically like the prior press release, but just now enhanced for the new numbers. So my prior discussion with you was remembering the government's going to pay you 50% of your pay as you go withholdings for the period from March to June, up to a capped amount of 25,000. Okay, and it was minimum 2. Remember? Well, now what they're doing now is going, we'll give you the whole 100%. Okay, so they're going to pay the tax out of the PAYG tax out of employees' wages during the same period. Why is it 100,000? Because obviously they're going to do it for the next BAS as well now. So from March to June, whatever tax you've taken out of your employees' wages, let's call it $75,000. Let's go that high, right? Well, they're going to say, well, we're going to pay all of that up to $50,000. So you'll get a $50,000 credit against that. So instead of paying $75,000, you will pay $25,000. If your withholdings was $50,000, then they'll pay the whole $50,000 and so forth, right? To the minimum payment of $10,000 for that BAS. And what they're going to do is just double that again. So then they'll do the same thing in the next BAS period. Okay, so July, October. So that's how. So what they will literally do is that they'll chuck $100,000 for those people, or let's say, and let's do a scenario, something in the middle. Let's say that between March and June 2020, you paid staff, because the coronavirus is only really starting to hit our businesses like last week and now. So let's just say that you worked out that there was $20,000 of tax that you took out of your employees' wages. Well, the government will so you lodge your BAS, and there might be GST of 20,000, PAYG of 20. So you owe the ATO $40,000. So what will happen is the $20,000, which was the PAYG withholdings, they'll just credit that and pay it for you. So you'll have to pay them $20,000. Now, remembering you've got a 4-month almost, you've got another 4-month deferral on paying that BAS as well. So you can literally lodge your BAS, your PAYG gets paid, and automatically from the credit, and your GST can be deferred for another 4 months. Okay. Then at the end of 4 months, we can potentially look at giving you an ATO payment plan. Okay. So what you are going to get, which is what's called a permanent difference, is the tax out of your wages is going to be paid. And that's going to happen exactly the same thing for your your July to October. Okay. Hopefully that makes sense. Please send me an email if it doesn't make sense. And again, a lot of people, they're going to be shaking their head going, well, I want cash in my bank account. I don't believe it's going to happen from this. And it's not going to help the clients that have just had to tell their employees to go away. Now, remembering people are on full time, you had to pay the holiday pay and stuff anyway, so it's going to help with that. But yeah, no one's paying the net wage cost to you, are they? You're still having to pay that. I heard that in England, listening to the media last night, I believe Boris Johnson has put a thing out where he's paying everyone's wages for so many months at a cap of £2,400 a month. So the government, I think that a lot of these things that I've told you before, I think they are coming around with it. We'll look at that in a second, but I think that might be the third or fourth or fifth thing down the road that the government will probably start picking up some of the tab. But it's not going to help a lot of you people who don't have employees. And that's going to happen. That stuff there is more about this stuff for you guys, get some superannuation out and get in some Centrelink straight away. That's where people who don't have employees and just don't have an income. What Scott also said was that it doesn't mean that you have to be sitting at home on Centrelink. You can actually try to do something in your business. If there's something that you can do, you might have 90% of your business closed down, it might be 10%. You still do that and still be eligible potentially for the support. Okay. Right. So that's that one. So the next one was, okay, this is, I don't know how to put this one, but it's it's basically saying that, hey, you know that in the society that if you don't pay your bills, you can get sued, and pretty much from $2,000 onwards, you can send a statutory demand. They're basically saying, listen, hey, fair go. Someone can't pay their bills. We're going to increase the statutory level. Now, does he say how much it is? I don't think. I think he said it was about $20,000. I think you can't sue anyone until they owe you $20,000, and I believe also rather than having 28 days or something to respond back, they're giving you 6 months or something like that to respond back. So basically saying, hey guys, we don't need this legal rubbish going through. If someone's not paying you and you can sue them, well, you can't sue them and will issue a statutory demand until they owe you 20K, and also they've got a lot of time to respond back to you because they're basically in survival mode now. So take that as what you want. Also, the good thing about it, I guess, is that, but there's temporary relief for directors. So if officially speaking, that's why I've got you to your cash flows. Officially speaking, how do you know that your business is actually solvent at the moment? You don't even know what tomorrow's going to be, whether you're actually going to rock up to it. Sorry for the little technical glitch there, but just continuing here. The thing about this provision just here, the ATO will tailor solutions for owners and directors of business that are currently struggling. So the drama is, I think that they're going to taper down the enforcement of any actions they already have in place. So if you've failed to comply with the director penalty notice, they will get to some solutions. Say, hey, okay, let's give you a fair go. We know things are tough. I'm not sure if this is going to extend to people who are been doing fine and all of a sudden find that you're in there. There's extra area here. There's temporary relief for distressed businesses. I'm not sure whether it's about ones that have happened before or the new ones. So watch the space. But I think the most important thing to do is to understand that the government has mandated to the ATO and government collection agencies that, hey guys, seriously, we're in a really crazy predicament at the moment. Just take it easy. So therefore, we can potentially use that to our advantage if we wanted to go through and discuss that. Now, looking at the rest of this press release, as you can see, it's very similar to my first video with the first stimulus package. So I'll just go through it really quickly. I know that we've gone through this, and you're probably aware of this now, but increasing instant asset write-off, so that still hasn't changed, still 150,000. Now, one thing I do need to point here, I've been getting a lot of emails and phone calls from clients regarding this. Now, as you do know, that cars do have a luxury limit, so there's about $57,000 that you're allowed to claim a motor vehicle depreciation, and above that you can't. Now, a lot of cars are costing over $57,000. So a lot of questions are, hey, if I buy an $80,000 car or van or something like that, vans are okay, but talking more about motor vehicles, cars, let's say, can I deduct it under the $150,000 new increased write-off provisions? My answer is I don't know yet, because I've tried to get through the ATO to give me some specific guidance on this area, whether the 150 threshold replaces the luxury tax depreciation limit, and I haven't been able to get any answers. So my conservative answer is that I think that provision is still in the legislation. So you can only claim up to $57,000 of the write-off, I'd suggest, because that's the depreciation that you can claim. Anything above that probably won't be until we get some more information from the ATO. The spirit of the legislation tells me that it would be available to claim. But again, please don't go out and get into any contracts for cars because of this push until you speak to your team at MURO. The other thing about it is as well is that, okay, this is still a stimulus package. So, there are going to be some of you guys that aren't as affected as the others. And if that means you use the stimulus to push money into the economy and buy equipment and cars, so therefore when we do recover, you've actually got an advantage because you've got tax benefit of it, do it. Again, go back to my prior video to you about doing your cash flow. Very important. Okay, next one is again on depreciation, which means if you're buying things that are above the 150, You can still write off 50% of it and then depreciate the rest of it normally. I'll be talking about these as we go closer to 30 June when we do your tax planning, because right now we're into survival mode. We're into, okay, what are our biggest expenses, our rents and our wages? So let's look at that first. Obviously, income is the most important thing, I guess, above everything. So these things will come into play when we start to know what's happening. As you know, every day you wake up or read the paper or go on the internet, there's a new thing that's happened, schools shutting down, that type of thing. So yes, important. This is a stimulus, but let's look at what's going to get us through the next week, I guess. Again, nothing changed in the supporting apprentices trainees. I think it's a brilliant initiative to keep the young kids, all mature age ones, but typically young kids as an apprentice. So remembering the government's going to cover 50% of the wage from January to September. It's about $21,000 per eligible trainee or employee or apprentice. So that's brilliant. Now, this is the new stuff as well. So this is what I've been saying from day one. I've been trying to champion this, and I did make some statements suggesting that unless the government underpins all this stuff, it doesn't really matter, because banks need to turn profit, and banks are businesses just like me and you. So what they've done is that they're supporting the banks. So basically suggesting that they're going to try to allow credit. They're allowing, they're providing a guarantee. If you have a look here, guarantee of 50% to new SME lenders to support new short-term unsecured loans. Okay, so it will guarantee up to 40 billion new lending. So what you mean by guarantee is important. So what it's saying there is it's not going to guarantee you're going to people are going to borrow. They're guaranteeing the fact that if you can't pay it back, the banks aren't going to be stumped with a bad debt. The government will fork out of their own pocket that loss. Now, this is going to be, I believe, if you look at the notes, I think it's around a $250,000 loan. Morrison did say repayments, I think it's about 6 months. You don't have to make any repayments. So what does that mean with interest and stuff? So all the banks right now are scheming and working out policies and provisions and even new products potentially to fit into this thing. Obviously, going forward, if you have a look at this as well, the bank, the RBA has provided 90 billion at a 0.25% lending to banks. Hence why those interest rates. So they're basically saying, "Hey guys, banks, business can't afford the 8s and the 9s and the 10s unsecured lending. So can you please here's some money." At a cheap rate, pass on the interest rate benefit, so you're still making your margin. And now on top of that, what they've said is, hey, okay, the government's gone, guys, go and lend this money, right? And you're not going to get a repayment for 6 months, and then it's going to be a slow burn. I think it's a 3-year term, and let's go out there and help these businesses out. And you know what? If something does happen, these guys can't make it through to the other side. Then we'll pick up the tab, or 50% of the tab anyway, right? So this is what I'm getting at. So again, for us personally, and it's going to allow us to have access to funds. Now, it just goes from extraordinary times leads to extraordinary measures, because what's happening is that, what made the GFC, which is really shocking lending practices where any person was getting a loan, it's automatically happening almost again, where we're going, hey, here's some money, keep going. And then eventually what's going to happen as we get through this, there's going to be these loans out there. So please be careful, do your due diligence. And that's what I'm getting at. Look at your cash flows, have a chat with us. Okay. Here at MURO, we're waiting to hear from you guys about this. If not, we're calling you in advance. So remembering that there's going to be a lot of money floating around, but let's use it for proper causes, and let's make sure that we're actually making the best decision about that. Okay, so that's what this whole thing's about. So that's a massive thing that's going to underpin a lot of money. The biggest issue I have, and I think this is where the government's really worrying about, is that if businesses close and employees can't get paid, well, businesses can't pay their rent. Therefore, commercial property that is going to go down. If businesses are shut down, then again, how are they supposed to pay their rent to the landlords? Therefore, that's going to affect the yields of those properties, which means evaluations upon yields. if people can't pay their rent or their loans, there's going to be potentially a property market crash. So that is going to cost more than what the government's giving out. So they're basically working on a bit of a pendulum where they're saying, okay, well, we give this way, we save that, right? So that's what they're trying to do. So we're trying to avoid a massive issue with the property market, which underpins all our lending. Pretty much everything that underpins businesses has a lot of real property lending. Since GFC, as you know personally, there's not a lot of unsecured lending. So most of it's secured, and most of it's secured on property. So property values go down, LVRs get adjusted, and we're in all sorts of, you know what. So that's what's happening. So be very prudent with what you do with these things, okay? And therefore, that's where you lean on us to help. What I'll tell you to do now is, if you're not writing an email after this video, you should be calling the banks first thing Monday morning and telling them, okay, we know that we've got a 6 months holiday on our loans that's been legislated. What products can I get into? Does that include my car loan? Does that include my chattel mortgage, my printer loan? What are included in these things? Does that include my rental property? All these things. What's included? What's not? Get them to put in writing. Let us know. Show us, and we can do that. And then we can calibrate your cash flow statement and see what happens. We also got to make a decision about, okay, what does that mean? Are we just pushing the can and kicking the can down the street? And how's that going to affect things? How's that going to affect the viability of your businesses with prices and stuff like that coming out, right? So therefore, it's important that you guys get on the front foot and speak to your banks. I can't speak to all your banks for you. Happy to talk to them if you're having issues. So please go and make that first step. Send an email right now to your banks and say, what's in it for me? What are you doing for me? And let them and just at least be on the waiting list. People who get served first will probably get the first part of these measures. Okay, so that's important. Okay, can't stress that enough. Okay, the rest of the stuff is just talking about. We still think that we're being prudent about it, and we've spoken to APRA, and we still think that the banks can afford to do this. Yada yada yada. I'll send this to you when we send out the proper unrefined version of this. So the refined version of this recording, but these are where all the things are happening. This is a summary of all the responses. Don't worry too much about all these negative numbers here. That's what it's costing you. It's not our problem. It's the government's problem. And this is what you're getting. So there's householders and individuals, and this more is for the businesses and what's happening and how it can help you. Okay. So in summary, guys, this package has been about a little bit about stimulus, but more about underpinning things. So like I said before, we need some government support. Government is guaranteeing some loans. You're going to be able to get some loans out there. So that means loans is not a freebie. The government, this whole $100,000 cash thing, remember, a lot of it's political. It doesn't necessarily mean $100,000. I can only mean $20,000 to you, but every small business that employs will get $20,000 credited to their ATO account. Okay? And that's it. So don't go wait for the check that's in the mail from the government. So they're the sort of things to look at with this. We've still got all the other things to look at. I'll keep updating you. Again, this is so fresh off the press. I haven't heard any debate backwards and forwards. And as you're probably hearing by the time you're watching this video, you know, the issue I'm starting to have now, what I'm really concerned about is the states and the federal government are starting to sort of walk different ways. So where we have the government who needs business to somewhat continue in a certain vein to enable the economy to start at least doing something to slow down slowly rather than slow down at an actual in a second, let's say. The states are saying no. We're getting, especially Victoria. We want our schools to close. We want to stop non-essential business working. So I can see that in the next day or two, is probably going to happen, right? So start thinking about how you're going to be operating your business when the door is shut. Okay, so you've had a week now of scare to work out how to work from home. It's happening that there will be some non-essential closures, and that's depending on how it's going, because the pressure is on the states, and they will pressure Scott Morrison, and because it's the two biggest states that are pushing and lobbying for this. And again, we've got issues against, we've got Labor, state, and we've got federal. It's in Liberal, so you're always going to have those issues. So I think what will happen, in my opinion, whether it's worth anything, is that we will start having closures very soon. I know the effect of what's happening to my clients in Italy, how that's affecting them. So, like I said, in summary, there's some good stimulus out there. We're here to help. We're here to get you through. I think if you take all these measures on board, depending on your, I'm going to have some clients that are actually are going to find it very hard to get through. I'm going to have some clients who are not going to find much of a drama, and I'm going to have a lot of clients in the middle. And I'm hoping that I can help save, or we can all work together to help save the majority of those, so we can get over that bridge and get to the other side stronger. So again, I implore you guys to stay safe, stay together in your homes. Don't go out if you don't have to. Please do our bit as an Australian to not only not affect the people that we love, but other people out there, because all we're going to be doing there is putting pressures on the medical departments, and also ultimately the government, who's trying so hard to soften this blow that we're having at the moment. Okay, all in all, we are strong people. All right. We are clever people, and we have the ability of actually learning from past mistakes. Our forefathers, our grandfathers, our great-grandfathers have had to fight in wars when they didn't know whether they were going to live or die. They didn't know whether their houses are going to be there tomorrow. All right, this is our war. Okay, this is what we need to do. So it has been happened before, and we survived, and we're here to tell the story. We will get through this, but we have to do our little bit. Okay, make hard decisions. Okay, and that's what will happen. If you are struggling with your business, please call me, call the team, email me, text me, whatever you need to do. We operate a think tank in our office all the time. When clients have issues about how am I going to get, if I've lost 50% of my income, how can I do that? We push it through our think tank that we have in the office now. We come up with ideas to try to help you, and we workshop them, and we try to give you some feedback. That's what we're offering as well. We're trying to do our little bit we can, because thank God we can work from home as well. So I'm going to leave you with what Scott Morrison did say in his press conference, that we will emerge stronger. We will. You have to believe it, but you have to do your part. So I'll keep updating you as much as I can, but please stay safe, and God bless.